What's going on, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. Today we're going to be going over AMC stock for the options chain. Obviously, the best strategy for investing in AMC is going to be the buy and hold method of just pure, plain and simple AMC shares. Kind of risky with options, and a lot of that money is actually going to the hedge funds who are selling naked call options, which is inflating the options chain, which is making them a lot of money, and a lot of apes are ending up losing a lot of money buying these call options. So definitely watch out for that. But the best strategy to play AMC, if you want to do options, shares is the way to go. I'm holding my shares, probably going to buy more. But the best strategies for AMC options, if you choose that route, would be to sell options. That would include selling calls yourself, because obviously the call options are pretty inflated. Premiums are very high, so you can capitalize on that a little bit. Or you can sell cash secured puts, which is the recommended method, which is going to allow you to basically get paid to buy AMC stock at a lower price if it does happen to dip. So it's a very good strategy, and it does offer a lot of premiums. Let's head over to options chain. We will be going over to probably the August 6th expiration, which is just 2.5 weeks out. So we can take a look at the options chain here, and let's say you want to buy AMC stock if it hits 40, which is a pretty nice dip. AMC stock is exploding right now. A lot of people are buying into it. There's a lot of momentum, and anything on this strike prices are pretty good. It's safer than outright buying 100 shares, because you're going to basically get paid to buy stock at a lower price. So, for example, a $40 strike, you're going to collect around $583 of premium. So that is going to be quite a bit in just 2.5 weeks. But you do have to put down a collateral of $4,000, because remember, this is a cash secured put method, and we do have to put down collateral in case we get assigned. Because if AMC drops below $40 by expiration, then we have to purchase 100 shares at $40 each. But we always collect our minimum credit of $583 no matter what, which is pretty sweet. So this is a pretty nice return on your money, and you are pretty much getting paid to buy dips. If AMC stays above $40, you are going to just collect the minimum credit of $583, and then the contract will expire worthless. So that is the downside of selling cash secured puts. So you want to choose a strike price that's pretty reasonable. You don't think it's going to hit. And if AMC happens to stay skyrocket to say $100, your max profit is still going to be $583, because you're not a shareholder yet. This strategy is simply for buying the dips at a price point you're comfortable at. So it is going to allow you to do that, and it is going to lower your cost basis quite a bit. As we can see here, our break-even point is actually at $34.17. That's our new cost basis if we do get assigned shares, because we're collecting $583 of premium, $5.83 per share. So it's going to be $40 minus that. We get $34.17 per share if we get assigned AMC shares, if AMC stays below $40 at expiration only. So that is going to be how the cash secured puts work. Obviously, if you're very bullish, you could do a higher strike, such as this $44 cash secured put. You're going to collect $800 of premium, which is pretty sweet. And this is very good if you were planning on buying 100 shares anyway, because our new cost basis is going to be $36 per share. If we get assigned on our puts, if AMC goes below $44 by August 6th. So $800 of premium, that's pretty nice. That's a lot of premium. Implied volatility is pretty high, so premiums are going to be higher as well, and we want to capitalize on that. Selling options is the most profitable way. It's safer than buying calls and buying puts, which is pretty risky. And a lot of these hedge funds are just selling naked calls, so you definitely don't want to put even more money into their pockets. So that's how we're going to be playing AMC. I'm just going to be continuously selling AMC cash secure puts week over week, collect weekly premium, which is going to be pretty nice. $4 strike looks pretty good. If you want to be safer, if you're fine with buying AMC, say at $30, you're going to collect $200 of premium. You can go this far down and still collect a nice chunk of premium, and it's going to be relatively safe. Your new break even on a $30 cash secure put is going to be just under $28. So if you're fine with holding shares at that cost basis, you're going to be sitting pretty happy. Obviously, if you're pretty bullish, you want to raise the strike prices a little bit higher or just outright buy shares. Buying shares is going to be the best way to play AMC because we don't know what's going to happen. This is going to be a slow squeeze. We don't know when it's going to occur, but once it does happen, it's going to be huge. So buying and holding shares for the upcoming months, the long term, for however long it takes for the squeeze to occur. The shorts have not yet covered their part of their short positions, so they're losing millions and millions of dollars every single week just by holding these short positions because they do have to pay tons of interest fees on their short positions for the borrowing fees. So that's how we're planning on playing AMC. If you want to be a little bit safe, if you own shares already, selling call options, covered calls would be a good strategy just to protect you from the downside. I know a lot of you are invested in AMC. It's pretty volatile, so you just need to be mentally prepared for what occurs. So I'm going to be selling some really far out of the money call options week over week, collect some nice weekly premium, and just wait for the squeeze to occur. Not going to be worrying too much what's going to happen in the short term. I'm pretty confident in this AMC squeeze, and I know the ape community is confident as well. We're buying and holding, and the amount of movement in AMC stock that occurred yesterday, up around 24% and another 4% in after hours, shows that there's a lot of bullish momentum and a lot of strength in AMC stock right now. So we can see AMC probably having a nice week this week after being beaten down the past month from highs of around $70-$60. And it's now at $44. And it shows that there's some nice support around this low $30 level. A lot of the apes are buying up AMC shares on the dip, which is pretty good for us, showing that the ape community is united. That's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on AMC, as well as AMC options, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.